Welcome to Cover Crunch, your go-to channel for all things insurance. We know that insurance can seem complicated, and understanding the ins and outs of your car insurance policy isn't always easy. But don't worry, we're here to break things down and explain things in a way that is simple and clear. If you've ever found yourself wondering how to lower your car insurance premiums without compromising on coverage, then you've come to the right place. In today's video, we're going to discuss a key factor that plays a huge role in how much you pay for your car insurance. Setting your compulsory and voluntary excess ***. This strategy is one of the smartest ways to potentially reduce your premium, but it's important to understand how it works before you dive in. We'll be talking about the difference between compulsory and voluntary excess, how each one affects your premium, and how you can adjust them in a way that saves you money while keeping you properly protected. So, let's get started. What is excess in car insurance? Before we dive into the specifics of compulsory and voluntary excess let's first define what excess means in the context of car insurance. Simply put, excess is the amount of money you'll need to pay out of pocket when you make a claim on your policy. So, let's say you're involved in an accident or your car is damaged by something like vandalism, fire, or theft. Your insurance company will pay for the repairs, but only after you pay a certain amount yourself, the excess ***. This is essentially your contribution toward the cost of the claim. For instance, if your car repairs amount to £1,000 and your excess is £250, then you'll pay the £250 upfront, and your insurer will cover the remaining £750. Now, there are two main types of excess that you'll need to consider when setting up or renewing your car insurance policy: compulsory excess and voluntary excess ***. Both play a role in determining how much you'll pay for your premium, and understanding how they work will help you make the most informed decision. Compulsory excess, the insurer's decision. Let's start with compulsory excess ***. This is the amount that your insurer sets and requires you to pay when you make a claim. Unlike voluntary excess, the compulsory excess is non-negotiable. The insurance company determines this based on a variety of factors, such as your age, driving experience, the type of car you own, and even where you live. For example, younger drivers or drivers with a history of accidents may face a higher compulsory excess because they are statistically considered more likely to make a claim. Similarly, if you drive an expensive car or live in an area with higher rates of car theft or vandalism, your compulsory excess may be set higher. The compulsory excess plays a significant role in determining your car insurance premium. Here's how: the higher your compulsory excess, the lower your premium might be. This is because the insurer is sharing less of the financial risk with you. By agreeing to pay a larger excess, the insurer assumes that you'll take on more financial responsibility if something goes wrong, and in return, they reward you with a lower premium. However, there's a catch: if you need to make a claim, you'll have to pay the compulsory excess upfront. So, while a higher compulsory excess could mean a lower premium, you need to ask yourself if you can afford that excess when the time comes. Voluntary excess, the part you control now. Let's talk about voluntary excess ***. Unlike the compulsory excess, which is set by the insurer, voluntary excess *** is the amount you agree to pay on top of the compulsory excess if you need to make a claim. This is where you have more control. In simple terms, the higher the voluntary excess you agree to, the lower your premium is likely to be. This is because the insurer views you as taking on more of the risk, and in return, they reward you with a reduced premium. For example, let's say your compulsory excess is £300, but you decide to add a voluntary excess of £200. If you need to make a claim, you'll pay £500 total, £300 compulsory and £200 voluntary. But because you've agreed to shoulder more of the financial burden in the event of a claim, your insurer will lower your premium. It sounds like a great way to save money, right? Well, it can be, but there are some things to keep in mind. Increasing your voluntary excess may reduce your monthly premium, but it also means you'll have to pay more out of pocket if you make a claim. So, Before deciding to bump up your voluntary excess, think about whether you can comfortably afford to pay that excess in the event of an accident or another incident. If you set your voluntary excess to high, you could end up in a situation where you can't afford to pay it when the time comes to make a claim. Striking the right balance between compulsory and voluntary excess. So, how can you use both compulsory and voluntary excess to your advantage? The key here is finding the right balance. While the compulsory excess is set by the insurer, the voluntary excess is something you can adjust. But before you start tinkering with your voluntary excess, you'll want to first understand the compulsory excess your insurer is offering you. Since you can't change that amount, it's important to factor it into your decision. Once you know your compulsory excess, you can start experimenting with different levels of voluntary excess. The more you're willing to pay out of pocket in the event of a claim, the more you'll save on your premium. However, there's a point where the savings may not be worth the risk. That's why it's essential to think carefully about how much excess you can realistically afford. Start by increasing your voluntary excess by a small amount and see how it affects your premium. You may be surprised at how much money you can save with just a slight adjustment. But again, the right balance will depend on your financial situation and how much risk you're comfortable taking on. Using comparison websites to find the best deal. A great way to figure out the best level of voluntary excess for your situation is to use comparison websites. These websites allow you to compare different insurance providers, policies, and premiums in a matter of minutes. Most comparison sites let you adjust your voluntary excess so you can see exactly how much your premium will change when you increase or decrease your excess amount. This is a powerful tool that can help you find the sweet spot between a premium you can afford and an excess that you're comfortable paying if you need to make a claim. By using comparison websites, you have a much clearer idea of how much you could save by adjusting your voluntary excess and what the impact on your premium will be. It's a great way to experiment with different options without committing to any one policy immediately. When does it make sense to increase your voluntary excess? There are times when increasing your voluntary excess makes sense. For instance, if you safe driver with a clean record and don't anticipate needing to make a claim anytime soon, you might feel comfortable setting a higher voluntary excess. This is especially true if you drive an older car or a vehicle that doesn't cost much to repair. In this case, agreeing to a higher excess could save you a substantial amount on your premium without increasing your financial risk too much. However, if you new driver or if you have a history of accidents you might want to keep your voluntary excess lower. In these cases, a higher excess could leave you financially exposed if you need to make a claim. Similarly, if you drive a new or high-value car you might want to be more cautious about setting a high voluntary excess as the repair or replacement costs could be higher. In these cases, a lower voluntary excess might be a safer option, even if it means paying a slightly higher premium. Understanding your car's value and condition. Another important factor to consider when deciding on your voluntary excess is the value and condition of your car. If your car is older or less valuable, you might not mind increasing your voluntary excess since the cost of repairs won't be as high. However, if your car is newer or more expensive to repair, you may want to keep your excess lower to avoid facing a large out-of-pocket expense in the event of a claim. This is especially true if your car has a high market value and any damage could result in expensive repairs. The bottom line, car insurance isn't just about the cheapest price when it comes to car insurance. Saving money is important. But it's equally crucial to make sure you have the right coverage Adjusting your excess both compulsory and voluntary can be a great way to save on your premium, but it's all about finding the right balance. Don't just go for the lowest premium, because that could leave you in a difficult position if you have to pay a large excess after making a claim. Think about how much financial risk you're willing to take on and what you can comfortably afford to pay out of pocket. In the end, it's about making sure you get the best value for money while still having the protection you need in place. By understanding the ins and outs of compulsory and voluntary excess you can make an informed decision about how to set up your policy in a way that works for you. Wrapping up, I hope this video has helped clarify how compulsory and voluntary excess work, and how adjusting these amounts can help you save money on your car insurance while still maintaining the coverage you need. If you found this information helpful, don't forget to subscribe to Cover Crunch and turn on the notification bell so you're always in the loop when new content drops. If you have any questions or suggestions for future videos, feel free to drop them in the comments below. I'm always happy to answer your questions and create content based on your needs. Thanks for watching, and I'll see you in the next video.